Hello, everyone. Welcome back to the RationalInvestor.com's daily brief. Here we are on Thursday. Looks like we're live on YouTube, so that's good to see. It is April 11th, Thursday, April 11th. Normally on Thursdays, we have Julian come in and give a summary of what he's sort of seeing in the market. And he has a very unique perspective. He likes using some interesting tools that he's been working with over the past few years. But he let us know about a half an hour ago that he's not going to be able to make it here today. So we'll try and shoot for him to come in and give us a report tomorrow. But if we do have the bear on tomorrow, then I think maybe we'll just mind you, the bear's been on already 3 times this week. So we may see if we can get Julian to come on and give us a summary of what he's seeing tomorrow. But looks like you're just flying solo with Brian here today. Mr. Mayor is still doing a conference in Switzerland. So hope you're doing okay, Alex, and things are going well for you there. And the bear, and that reminds me, we should probably, well, not probably. If you happen to see Thomas on the site, if I understand correctly, he's got a birthday coming up. So everybody wish Thomas a happy birthday. And he's probably going to be face down in a ditch tonight anyway. So we probably don't need to bother him tomorrow. Yeah, so if anything, I do have really big, important Liam meetings today. So we'll probably try and keep this to like about an hour or so. And if anything, I know James likes to do his one-on-one, or not his what is it called? The group study session for the level oneers. So maybe James, if you're interested, maybe today we'll let you do that right after we're done here. So just an FYI, today might be a little bit splotchy here because we just got the old man at the helm here today. I'll try my best. We'll try and give you a bit of an overview of what I see going on in the market, and maybe now might be a good time for us to review the requests and do any particular studies or analysis that you guys are requesting here on the Rocket Chat. I think we have that. Let's see where that is. Where is that? Show requests. Show requests. I know it's around here somewhere. There it is. Let's see. We did yesterday. Yeah, let's see. Oh boy, a whole bunch of stuff posted here. Yeah, well, maybe we can sort of walk through that. We did take a look at a couple ideas that were asked about anyway. So we'll try and do that. Oh, and for whatever it's worth, Thomas, if you are watching this later on, it looks like there was a request for you to wear your bear suit. And actually, when we get into Bitcoin and crypto talk, maybe we ought to all be having our bear suits on now. Looks like things are going to take a bit of a pause here. But anyway, just quickly reviewing broader market, you can see stocks opened up the day a little bit happier, but now hopefully, everybody sees these M's and W's fairly clearly. You can see the Dow went and M'd out. Nice little triangle consolidation here. Failure and dump, and now we're down about 30-40 points on the Dow, which relatively speaking is a very small amount, 0.15%, like an eighth of a percent. So not huge moves, but at the same time too, what I'm sort of seeing, and I've been sort of tweeting this stuff out, is lots and lots of talk. And geez, now I get all this nonsense. Lots and lots of talk about what to expect with this earnings season. We've been talking lots recently about earnings recessions. So not a bad little resource. Maybe pull this up. What to if you do play the stock market, what to be sort of looking for, and what expectations are for earnings season coming up here. So we are officially into that window. The Fed minutes came out, and unfortunately, the Fed basically said that the data is relatively strong, and they're not actually even ruling out interest rate hikes down the road. I think I put a tweet out to that effect. Here we are. Yesterday, Fed officials are leaving the door open for more rate hikes if the economy improves, minutes say. And the econ's coming out of late. And actually, this is a great opportunity for us to just sort of showcase how you can use the website a little better. I like to follow this economic calendar. I like to set it to recent, and if we just look at some of the econs just coming out of today for the states, you can see PPI, that's a producer price index. That's in essence sort of think of there's two different inflation gauges. There's the gauge that manufacturers have to pay, and then they mark up prices, of course, for retail, and so then you have consumer price index. So as you can see, producer prices were expected to come in relatively tame, and the consensus on the street was a little bit higher than the forecast, and the number came in quite a bit more than expected. So, this sort of speaks more to that idea that I just don't think that the Fed's got a lot of room to lower interest rates here. I suppose, if we look at some of the recent data, core inflation coming in relatively tame, so that's good. Month over month, you can see inflation rate a little bit hotter than expected. Year over year, this is basically where the Fed wants year over year inflation. And you can see there's a slight uptick to this. So, you put all that together, and I find it incredibly hard to believe that the Fed has any interest whatsoever in lowering interest rates. It's just really a question of, what does the market sort of demand? And that's where coming back to this kind of conversation is pretty handy. As we sort of talked about recently, I'm not buying the yield curve inversion story, especially with the long rates way, way, way up here. Yes, we are, the 2s and 5s are underneath the 3-month rate, but even the 3-month rate now is below the 10-year yield. So I'm just not buying a yield curve inversion. So I don't think the broader economy is going into recession. And frankly speaking, you look at the jobs reports, and the Fed itself is sort of reiterating that, things are just bumping along in the United States. Probably the areas of the world that we have to be most concerned with are really the areas that the leader of the United States is sort of, at war with regard to trade policy. So Chinese data probably important for us to watch, and demand out of China for all these sort of Western goods. And of course, now the sort of market du jour that Mr. Trump is sort of got in the crosshairs is the European market. And, we've been sort of talking a little bit about German GDP lately. Whether their manufacturers were going to, tip into recession and that kind of talk. Countries like Canada and Australia, commodity sort of supermarkets, they're probably the ones that are most vulnerable if the commodity markets are rolling over here in earnest. And, given Canadian housing, real estate market and all that, we've talked lots about that recently. Ironically enough, I don't actually think this go round. I hear lots and lots of people talking about, oh, the U.S. is going to have to do more quantitative easing and stuff like that. I actually think that's an old story. And, really good analogy of that is after 2000, 2001, the stock market broke. We went into recession. And actually, at that time, I even had a part-time gig because, commissions from sales were so poor. But I had a part-time gig with running video conferences for Transport Canada. And it was really interesting in that time period because when the video conferences that I happened to do was for the executive committee, and all they did was just month after month, week after week, meeting after meeting, all they talked about was terrorism, 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 terrorism. Obviously in the shadow of 9/11. And I used to joke with my boss at the time that these people are thinking backwards. They're not thinking forwards. And sure enough, there was like almost little to no terrorist activity following 9/11. There were sort of copycats, one-offs here's and there's, but nothing to that extreme. And I might argue the same sort of thing now, that people are, obviously quantitative easing had a material shock to our system. The purchasing power of the currency massively diluted, sort of artificial inflation injected into the system. As a result, isn't that interesting? So I said that word terrorism a few times, and I noticed that the YouTube page video just crapped out. Oh, it looks like it's back. Okay. We used to joke, actually, like 5 or 6 years ago, we used to joke, don't say the word terrorism on YouTube or else YouTube will blow you up. But anyway, the point that I'm trying to make is that I believe that quantitative easing is an old story. It's not a new story. And they already got all the bad bonds. Like I would make the argument, I made the argument on Twitter the other day that, somebody's like, oh, here comes QE4 and stuff. And I made the argument on Twitter the other day with some guy, I don't know where it is, somewhere in here, that really, I actually wouldn't be surprised if QE4 never happens. Because that's basically what everybody's expecting. Ironically enough, I could very easily see some massive political instability out of the United States if all of this Mueller stuff turns out to be a lot worse than expected. And that's what nobody's expecting. And I do remember there was a guy, I don't know, maybe 4 or 5, well, I guess 2 or 3 months ago at the beginning of the year, who is basically saying that he didn't expect Donald Trump to actually make it through to the end of the year. So we'll see what happens. Yeah, here was that comment. I said, for whatever it's worth, I think QE program was nothing more than the U.S. being forced to buy back their bad bonds off the Chinese books. And if they didn't, the Chinese were just going to basically dump the American bonds in the marketplace and maybe even drive the United States out of business. They didn't. The central bankers all got together and said, okay, we got to take these bad bonds off of the Chinese books. How are we going to sort of, convince the public that this is the right thing to do? And so they created this whole quantitative easing thing. And frankly speaking, that's an old story. That's not a new story. So, long and short of it here is I actually think the United States will come out the best out of the other side of this recession that, should come once every 10 years. Recessions usually kick in. And ironically enough, I don't think it's really a question of the Fed lowering interest rates right now. You can see this euro-dollar contract. And actually, we can even look. This is a really good, handy little tool for you. Build one of these matrices. And when you see, this happens to be the entire interest rate curve. And when you see everything all pointing in one direction, that's a dangerous sign. And actually, I remember, we've tried several times to get the old commodity, and now actually the .ca site is no longer. I got rid of it. So I can't even show you that now, but we used to do a commodity trend survey, or at least I used to do it years ago. And what I found was that as soon as all of the markets in any one particular sector are all pointing one direction, and especially here with the moving averages as wide as they are, now we have to start thinking about, okay, who's going to turn over first and start the process going the other direction. So with interest rates all, basically very, down, bond prices up, the last one actually to turn was the corporate short-term interest rate market. So let's see, we look at these bond curves and you can see lots of sort of shooting stars, empires, fractal tops up here. So I'm kind of thinking maybe now we need to go through a period where interest rates go up. Hello, there's somebody who's obviously new to the Daily Brief. Good idea to throw yourself on a mute if you're going to join us here. So with all that talk, you can sort of see the W starting to form in yields, which would mean prices are going down. And I'll be watching specifically with regard to Fed policy. I'll be watching how this corporate interest rate vehicle, this Eurodollar contract acts. And then also, too, our good old buddy, the TED spread. TED spread's actually been working favorably, unwinding sort of credit risk in the marketplace, but you can see the definite potential for a new W finally coming in here. So while the TED spread was trending down, the Fed basically got the green light not to do anything. And I think that's basically been the sort of trend over the past, 4 or 5 months or so since that sort of December meltdown in the stock market. Let's see how that goes going forward. My hunch actually is that interest rates could start rising here. We'll see how that goes. We've talked lots about stock markets. Do we have head and shoulders up top here? Maybe. Could this be the beginnings of the sell in May and walk away scenario? Could be. Do we actually have short setups in place? I think it's still a bit early. And as Thomas has been sort of alluding to recently, I could very easily see a period of chop, especially since we're going through this earnings season. And maybe if earnings aren't really that good, i.e. earnings recession, maybe stock market just goes sideways for a bit here. That really wouldn't surprise me at all. And then coming up into sort of the May-June period, and usually we get a pivot. Usually it happens after the July 4th weekend. It's a big sort of national holiday in the United States. People come back from that holiday feeling a lot more optimistic, and then we officially kick into second quarter earnings season, and that's usually where we pivot. So at some point, I don't know what this is going to look like, but at some point, the very normal sort of seasonal move is, and sell in May and walk away. Here comes May. The very normal seasonal move is a push to the downside, which might just clean up. There's a big old hole on the charts there. And interestingly enough, I had sort of pointed out on the way down, all these gaps on the way up needed to be filled in. And you notice that basically there's only one little gap left here. Maybe they're saving that for the summer, but almost all of these rest of these gaps have been filled in. You can actually make the argument now exactly the opposite direction. Big old, we can maybe even start putting some in here. Huge gap right at that level there at 23,500 on the Dow. I also see a cheeky little gap there and obviously there, so you can actually start to see the level starting to form here. And we could start probably thinking about fibs heading back down. And you notice, gee whiz, what a big surprise. We're probably going to see, there is our reload zone. And there is that big old honking gap that we just talked about. How that lines up nicely with Mountain Man level. My hunch is we probably have to dip down in maybe even against this trend line here before this is done. But this is going to take a lot of play out. And, I'm hearing, if anything, like I said, I don't think it's the pressure is going to come from the interest rate market. That TED spread doesn't look like it's in crisis mode right now. Bond markets probably are in the process of rolling over. So it's not anything that's going to be driven interest rates. I think actually probably what this is really going to be driven by is a combination of, questionable earnings projections going forward, coupled with political risk. So that's sort of my take on stock market-ish kind of conversations. When we look at sort of the bigger picture, US dollar index here again with the sort of talk about the Fed not really, and I almost think that talk about lowering interest rates is almost laughable here. So I guess, on balance, what I'm sort of thinking here is that the US dollar index itself is basically caught in a trading range. We've bumped up against the top end of the range, and, everybody, including Colleen, should know about, roughly what the percentage of time markets range versus trending. So, it really shouldn't surprise us that, yeah, we were trending higher through this period. And then we've gone into a ranging market where we're just bouncing back and forth, back and forth. And as long as the sort of talk is that the Fed could still potentially have the green light to increase interest rates down the road, that's going to continue to sort of catch a bid for the US dollar index. I also noticed too that if we go and look at the currencies in particular, where are we here? Currencies, there we are. British pound, ironically enough, and the euro, right? Obviously, very connected. I still think euro is pointing lower. Trend is still down. But I did notice that the talking heads and the bureaucrats and stuff out of Europe have basically just played, kick the can down the road. And I think, if I'm not mistaken, they've actually given Britain until like Halloween now. And how ironic, eh? Stock market crashes usually the end of October, very typical. And now, basically, we have this big Brexit event. They basically kicked the can all the way down to Halloween, October 31st. There's almost like you literally couldn't write better fiction than this reality. It's almost funny in a way. So, what a surprise! The bureaucrats basically decided to do nothing. And that has bought Theresa May another, who knows how long, to try and convince the British people that the Brexit vote that they put through a few years ago, my hunch is, and I've sort of said this repeatedly, I think that the whole Brexit thing was actually a massive failure, and it completely backfired on the Conservative Party. Conservative Party, of course, is more business oriented, right wing leaning, that kind of stuff. I honestly believe that Cameron thought that this was a slam dunk easy win for him. And when it didn't go that way, basically the political powers in Britain have done everything they possibly can to try and derail this Brexit event. And now, if I understand correctly, they're probably going to try and have another vote on it and see if they can somehow get the Brexit thing, taken back. But anyway, so, anyway you shake it. And then, of course, the economic data coming out of Europe isn't really that encouraging either. And now, of course, like I said, the latest sort of scuttlebutt. Now, is this sort of a do you guys remember back in Clinton's days? He was under a lot of political pressure, and then all of a sudden, out of nowhere, they announced that they were waging war on like Serbia, and they were going to bomb the shit out of Serbia. And yeah, so Colleen remembers it. She's of my generation, and people, made the comment, well, was this some sort of distraction to try and get the public not thinking about Clinton's political woes and Monica Lewinsky and all that kind of craziness. And I often wonder with Mr. Trump whether a lot of sort of this trade war and Mexican stuff is really to try and just try and get the topic off of Mr. Mueller. And from what I understand, his report is pretty damaging. It's just that he wouldn't come directly out and make a recommendation to go after Mr. Trump from his perspective. I think he would prefer that the politicians, people, the Democrats are running Congress right now, that kind of thing. I think he would prefer that they initiate that kind of move. And so that's my impression of sort of the chess game that's going on right now. And, what I see in sort of social media and stuff is that they're really pounding the table to get Mueller subpoenaed to testify in front of Congress. Mr. Attorney General just had his session in front of Congress, and the American public was not impressed by the sort of dodging that he did. So we'll see what happens. Only time will tell. As regard to price action, I fully think that the United States is basically, the U.S. dollar index is stuck in a trading range, with Europe very heavy. The commodity currency still very heavy. Interestingly enough, the only sort of bright spots are coming out of sort of classic markets, things like Russia. And, with the rising, we've talked lots about like the rare earths markets, the platinum and palladium markets. Basically, Russia dominates those markets. They've been fairly well bid lately. So Russia's doing well there. Rising energy prices helps Russia's bottom line. So I think they're doing well there. And if I understand correctly, the actual economic data coming out of Russia is relatively positive. So I think it makes sense why our sort of trending model has suggested it's turned the corner. Could we M out here and completely crap out? Sure, anything can happen. But I think right now the big sort of worry is what happens out of Europe. And then specifically with regard to sort of these supermarket markets, Canada and Australia, do they have to unwind violently through the end of that commodity cycle? And I still think that they're sort of, they're humming and hawing right now. Australia is an excellent sort of proxy on Asia, and Canada is an excellent proxy on sort of demand out of North America. Let's see. So we talked a little bit about interest rates, talked a little bit about currencies, stock markets, kind of like what I said just a few minutes ago. It gets a little worrying when all of the markets are now all pointed in the same direction. The only market that hasn't joined the bull yet, from my perspective here, is the Japanese. If they start to go into face rip mode, then we're probably going to see the talk of rising interest rates pick up steam. I don't think these things have broken down. They've all just sort of shifted now to the upside, and they've got lots of room. So I was doing like a study on the Dow just there a few minutes ago. And interestingly enough, this is a weekly price chart. If you see gaps on the weekly price chart, that's a bit bothersome. So my hunch is at some point we will have to come down into these levels and fill these gaps in. But, for the time being, I think we're probably, I think we showed just a moment ago that head and shoulders pattern. This might take a month or two to develop here. This isn't going to happen like instantly. And of course, higher highs and higher lows, if we come into these levels and fill these gaps in and clean up, we might be able to skirt this big meltdown here through the seasonal trough window. I don't know. It's a tough one, and as I said before, if the political problems really start to accelerate in the U.S., then maybe we see the market come off a little faster. But for the time being, equity markets around the world are still pointing up. Horrible trade location to be buyers of these big indexes up here. But for the time being, the impetus is still to the upside, and until it actually ends out, we just sort of err to the bull side. I talked to you just a few minutes ago about Russia and noticed that that platinum market is very strong, so they're feeling pretty good about that. I guess we could argue, same sort of thing. All of these metals, to a certain degree, are all green here, which is a little bit dangerous. I did notice that stocks like North American Palladium starting to get a little bit toppy here, and that was a really good sort of leader on the rare earths. It just went absolutely insane bullish to the upside because of this palladium market. But you can see palladium already taking a bit of a pause. Not a bad, actually, maybe good leading indicator. So maybe we have to take some time, and now that everybody's green here, maybe we got to roll over and start asking whether these trends are for real or not. Energy market. Interesting to see that the energy market is now finally starting to turn back bull. Led by, of course, unleaded. And of course, we've been talking lots recently about oil stocks. And oh my goodness, it looks like sort of the mid-tier producers was the place to be through this cycle. Unfortunately, I didn't participate, just couldn't quite pull the trigger, but we had about 3 or 4 different names that we were watching that all just took off like rockets. But, that's the way trading goes. Sometimes you can get in, sometimes you just have to watch. But interesting to see how these things are finally turning up. And of course, this is our classic, commodity broker trade, right? Buy your unleaded the middle of February, sell it the middle of May. You made money 9 out of the past 10 years, yada, yada, yada. Now, what's worrisome here is that we could potentially be doing an AB equals CD here. So we'll have to see how we act against these highs. But, if this thing gets going in earnest, there's no real reason why we can't rally right back up into this old traffic area. And notice, actually, I just saw this now. There's a funny, cheeky little gap that's actually still unaddressed from back in 2014. And actually, this is when I left the crude trading business, and the whole market just fell apart there. So, if anything, we probably should make note of that on our charts, that level right there. And let's see if that, interesting how this AB equals CD will take us back up into that neighborhood. So, we saw the oil stocks themselves jumping up here. So, maybe they're seeing further strength down the road in the energy markets. But, wow, one hell of a seasonal trade there. What it could have, should have. The only, commodity markets themselves, I'm actually getting really interested in the lumber market right now. Don't really like the look of U.S. lumber stocks. I'm going to be looking at some of the Canadian lumber stocks closely here. So, things like Canfor, West Fraser products. I used to trade one, West Coast Forestry, I think it was called. Jeez, can't even remember. But I'm going to be paying close attention to the forestry stocks over the next few days just to see whether they're starting to show signs of W's here. But that's a market that I'm really interested in, that sort of classic commodities. And I remember I was talking to you guys about at the end of the year, the pork producers, they had all come out into the end of the year and said that they were forecasting a really bullish 2019. And son of a gun, look at how that market is just ratcheted higher. Actually, wow, an OG Grim. I'm gonna throw you on mute, dude, if you don't mind. No offense. Hey, there we go. So damn, I'm a little pissed off at myself that I let this trade slip through my fingers. But one hell of a move there in the pork market. What it coulda, shouldas. I was super interested in the grains, and probably actually we might even start thinking about things like AB equals CDs. Pork prices look like they want to get up into sort of that $100 a pound sort of neighborhood. And maybe on that event, you notice things like meal has come back down against the bottom end of its range. The soybeans itself could still see a little bit more weakness. I was super jazzed about soy oil. The only problem here is that it's very difficult to find companies that specifically buy soy oil and trade it. So you can't really find a stock market proxy for soy oil, which kind of sucks. But I would still be interested in this market, and especially if this thing starts showing signs of exhaustion up here, then I think we're ready for a turn. And then finally, crypto. And unfortunately, we're a little bit worried about this. Yes, trends on Litecoin started to turn up. Now, this is like a month ago. And maybe we just got a little bit too far too fast here. And so we're coming off. I was really worried about people that were just like, yeah, I'm going to ride the bullets. We're going to go to new highs. Sure enough, we're going through the cleanup process. And it's interesting here because probably this is a good commentary that only 1, 2, 3 of the 8 markets that we're following here have actually turned bull. So we could still see some higher to get everybody back on the bull side before the market actually breaks in earnest. But things like Litecoin probably, this would be a classic too far too fast in my opinion. And kind of like what we just saw there on things like the platinum market and the forestry, the lumber market. I actually like the idea of pullbacks into reload zones, basically back against moving average support. So there is our reload zone on the weekly chart on Litecoin, back into these moving average support zones. The original double bottom, interestingly enough, the original double bottom on Litecoin, it just so happens to be sitting right in a reload zone. So could we see, a pullback into sort of the $50 neighborhood, maybe even as low as $40? That actually wouldn't surprise me at all here, guys. It really wouldn't. Yeah, I mean, usually they don't go straight up, straight down. Let's see if Colleen can remember this. What is our level that we probably should see a little bit of a fight at here, just to sort of decide whether this thing is still a bull or whether it's actually gone into sort of ranging? Not quite. I'll give you a hint. He loves his barbecue. 38. Well, 38.2. Don't forget the 0.2. So, to actually decide whether this bull is actually done, we probably should pull up like a 38.2 Bouncinator and notice that that's at $70 right now. So my hunch is probably, we got a nice little shock event there in the market. We'll take a look at Bitcoin in a moment. It was rejected off of a 50-day exponential moving average. But my hunch is we'll probably have to do something along the lines of battling at 38.2s. Do we M out? If we can put in 3 higher lows, then maybe we can start thinking about bot continuation trades. But for the time being, sort of the euphoria of the market now is on pause. And then, like I said just a moment ago, the moving averages are still bullish. They're still positive. My hunch is 13 EMA, which is what this sort of fast upper line is here. It's probably going to align with like a 38.2 tag here. So that's what I'd be sort of watching out of Litecoin here. But, we can look at that chart a little bit more in earnest in a bit. But from trend perspective, Bitcoin has not turned bull yet. Things like Dash have not turned bull yet. Ethereum has not turned bull yet. Ripple has not. Stellar has not. A couple of the sort of new upstarty kind of names. Tron turned back bullish there a while ago. And you might even argue that, You might even argue that we had sort of like little bullish setups that sort of fired when Litecoin started to take off there, coming off of these lows. Nice little fractal there, big jump up. This is actually where a guy like Grim, he likes to sort of apply his the bot trading rules to even things like 50% retracements, right? You could have even just said, well, at the very least, I'm going to look for a 50% retracement of this down move. So that's up into here. And I suppose, from a trading perspective, we could drill down to a lower time frame. And maybe you're hunting longs off of here, and your target for a trader is that sort of 50% rule. I'm going to apply my bot trading rules. Let's flip that around to the 50% bounce. So that would have you a nice little inside bar there off that 25 level. It's not a terrible level to consider taking a trade off of. Nice little test of that low right in here. Whether you took this here, move stop to scratch, and then got blown out, then tried to hunt to get back in, that's a tough one. 50% rule, move stop to trailing, hit level hit. My hunch is if we look at probably like maybe we can just, for quick conversation here, do we get any signs of divergence up here? Looks like the bulls kind of fell asleep, but not really anything disastrous. And actually interesting, Willie never did get stupid. So I might even consider this just a healthy pullback on a sort of move higher. So on balance, not a terrible looking asset. And I suppose you could even argue if you're like a Tron fan, I think maybe you could even go like boom, boom, and then go reload zone, doink, and flip that around. All right, so hopefully everybody can see sort of the trade setting up here. Right there to there. So there is your double bottom. There is reload zone. Let the market come back into the reload zone. Get like a nice little fractal in here, nice little inverted empire. Hell, why don't we even get greedy and ask for a nice W? Right? That might set up a nice little entry and risk against these lows. Not a bad idea. So keep that on the radar screen. And if anything, this dip down here and the fact that it's been so far rejected leads me to believe there's probably a little bit of buying interest. Interesting how there's a cheeky little gap right there as well. So, a trader's got to trade. If you're like, well, I'm a total Tron fan, I like the weekly trend has turned higher, I want to try and sneak in off of this bigger bot setup, I'd be keeping a real close eye on this point. What is that? 0.0233 up to 0.025. So it's interesting. Somebody in the lounge this morning, though, said, and I was sort of kind of like, let's cool our jets. Let's, play from a position of strength. I don't like how the Bitcoin market was rejected off its 50 EMA. Litecoin needs to take a bit of a pause. You could work stink bids against 78.6s and then have firm stops against these lows. Traders got to trade kind of idea. But, especially for newer people to trading, I think it's probably in your best interest to just let this sort of play itself out and let the W or fractal or whatever come in here. maybe even drill down to things like 4-hour charts and start hunting for signs of divergence in your momentum indicators before we start getting raw bull. If anything, I like the idea that, the market has broken, and now we just gotta, just totally cool your jets. Just, there's no hurry here. Let the market come into location, and then we'll start hunting back on the long side. That's kind of what I'm thinking here, guys. So just an FYI there. Okay, so that's a nice little sort of overview of the broader market. I'll just reset all this. All right, put all that back. Come on, away go. There we go. All right, so all right, so we'll leave that on there. Had you taken this bot level, then your stop has to be against these lows, like we said, and you just got to live with the results. And the good part about it is you got, a lot of moving average support down in this area. I kind of like the idea of, if you are interested in this one, drilling down to those like 4 hours. And Alex B here says no divergences yet. My hunch is when Sen's indicators start spitting up and Alex's scripts and stuff starts spitting up things like El Tangonators, Davos, all that kind of stuff off those lower time frames, that's probably when we have to start thinking bull again. For the time being, cool them jets. All right, so that sort of hopefully gives you a nice sort of broader market perspective. Gee whiz, that was almost an hour. Oh, sorry guys, I really didn't mean to take that long. Swear you let Brian loose and you never know what the hell's going to happen. Just quick boo at stocks. Still working my put option orders. Yeah, there you go. Answered your question, Colleen. And I think I would prefer that we maybe, specifically with regard to Alex's scripts, I think probably best to just ask Alex in particular. But anyway, okay, so back to, sort of stock market overview. Still working put option orders on the financial services ETFs in Canada. I would like to slowly build a put option position there, but no fills here. Not really seeing anything dramatic here out of the big stocks, just sort of a lot of malaise. And as I sort of showed you earlier, stock market did open up a bit stronger here this morning, but kind of fell off the map here. So, a bit of a red day, but these numbers just really, they're not startling. They're not staggering. They're just sort of, sideways kind of market action. Tomorrow is the end of the first 2 weeks of the quarter study. So we'll probably get a better idea at the end of tomorrow, especially with the weekly options expiry, of what to expect, with regard to the fund managers and the flows. It's not a bad idea if you do trade the indexes to quickly pop in and to get an idea where the big boys would really like the market to go out. This is a nice handy sheet here. You can see massive call open interest on the spiders at 289. And it's interesting how the open interest is rising into that event. That to me says that probably the powers that be would rather the market not close above those levels, because then that way those options actually expire in the money and they actually have to honor the contract. If they can get the market to expire below this level, then all those options expire worthless and, Wall Street hits a home run. As for puts, you can clearly see the heaviest open interest is in the sort of, what is that? That's a 280 put option on the SPY. You can see there's a bit of open interest here on the 285s, 286s kind of idea. But I think they hit like a monster home run if they can just sort of park the market somewhere in this area around 288 or so, maybe even as high as 289. But just let's maybe my hunch is they probably don't want this call to expire in the money. So somewhere around here, 288 would be sort of ideal for the options, boys. And if we go look at the SPY just real quick, we see that we are sitting right now at where's our SPY? I think we got it on here somewhere. Is that SPY? Yeah, there it is. 287.95, so 288, right on the nose. Yeah, that's not a bad prediction. So what a surprise. I wouldn't be surprised though through the day that maybe they like knee jerk it lower to try and get people to buy a whole bunch of puts. Oh yeah, this is it. It's gonna break. It's gonna break. And then tomorrow they just park it right back up here, and all those options that people went and panic bought today actually expire worthless. That wouldn't surprise me at all. But hopefully you guys are getting into the habit. If you want to get an idea of where the stock market is likely to go out, just taking a quick boo at that options site. Where the hell did I have it? Over here. And just, can they close the market above all the put open interest levels and below the heavy call open interest levels? Then Wall Street hits a home run. Hopefully this takes some time to get used to. When you see this, you go, I can't believe how utterly manipulated this market really is. You're almost in shell shock of how blatant this is. But after a while, you come to just realize that Jesus, just business as usual. So, Julian might do a little update on that with his offering tomorrow. But usually on Thursdays, we get him to comment on that going into tomorrow. Okay, so, as I sort of said just a moment ago, not really seeing a heck of a lot out of stocks. So I've got a couple big stock proxies on right now, and they're just sort of doing their thing. Bought this CenturyLink call options for like January, which is tons and tons of time. Absolutely love leaps. I don't see any reason to be even thinking about doing anything here. Just let that work. And I also bought a big an option on this Sonos, and it just keeps marching higher. If you were able to get in on this trade with me, for heaven's sakes, make darn sure that you have your orders working to sell halves on doubles. I got a funny feeling there's going to be some big old violent pop into here, but that's probably going to be the end of the move, not the beginning of the move. So just make darn sure you have those orders working. When I going into the close yesterday, I noticed that they were like offered $2.10. As you can see, my offer right now sitting $2.50. So we're coming up pretty close to my double level. And I would highly recommend, if you did get in on this trade, that you have those orders working, because it is probably going to be a violent end to this move. But we'll see what happens. Only time will tell. As I had sort of said a moment ago, kind of choked. I missed those oil trades. Looks like the euphoria in this trade in particular is coming off a bit here. Look at all these gaps. In fact, you could probably even do gap theory off of this move here. Breakaway gap, measuring gap, exhaustion gap, paints an upside target, which looks to be about where this thing topped out. So, I'll be watching for pullbacks, but I can't chase these names up here. It sucks because I was watching this down in here and then in here, and then I just let it get away from me. Boo, hiss, hiss, boo. And we had a couple others like that. That was one of them in particular. Hats off to guys like Zach, who actually found these oil stocks. Remember, we were talking about Halliburton yesterday. Zach actually found these bigger names way back here. And of course, you can see how the trade worked out. Can we buy these things here? No. So really just a spectator at this point on the bigger oil stocks. And we had a couple others. There was Baytech, which is a Canadian sort of intermediate that took off here. Kind of missed it. We'll have to just simply be patient and wait for the pullback, wherever the hell that damn thing is. It's on here somewhere. Where are you, Baytech? There you are. So again, kind of like that other sort of intermediate oil stock. Big sort of shooting star candle here. For heaven's sakes, please don't chase this, guys. If you are interested in this name, if you're Canadian, thinking about adding this to your sort of retirement account, those kind of conversations. And actually, this trades on the States as well. And I remember, Grim, weren't you talking about whether there were call options available on this thing? Please don't go and chase this up top here. But, if we can get a nice pullback, below a value, fill these gaps, reload zones against these lows, yada, 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 I might take a serious look at this thing. But can't chase it right here. And if anything, hopefully, if the energy names are topping out, then maybe what that means is the gold stocks can start catching a bit again. I noticed those gold stocks like this Alio. Interestingly enough, it had a pretty big jump up here yesterday, which I was a little surprised about. Had a bid, I was probing in here, didn't like how we broke, so I just walked away at scratch. Had a bid working at this gap. I was a little surprised that this didn't get filled here. And then we had this big snapback rally here. And now we're rolling over again. So I don't know whether the metals are ready to go. And we should probably take a quick boo at that. You know what I noticed recently, and I tried to get Thomas sort of thinking along these lines, is I often see that the Japanese yen and the gold, let's see if I can find it on here. The Japanese yen and the gold often move in conjunction. Yeah, there we go. So you can see the Japanese yen is coming off here, big chunk. So it really shouldn't surprise us that the gold is also coming off here. So, if you are a gold bug, we want to be watching this Japanese yen, these lows here very closely. And we'll see whether the gold breaks that. And I do remember that we had sort of talked a little bit about this recently, that there was a massive battle going on in the gold pits right against these levels. And, if the traders were taking their shots against these lows, and that was their trade that developed out of that. I suppose you could argue now on the flip side, have we gone beyond 66? It looks like it. So I think things like bots are off the table now. But, are we, was this a classic sort of ranging market state failure? You can see 61.8 up to 78.6. Gee whiz, we rallied into that window and then stalled. So, this is looking very sort of rangy to me. Big dump day, very, this is the vulgarities of the market. And if that Japanese yen's coming off, and if, excuse me, if the US dollar is actually going to break out up top here, then I would expect this to work its way lower. But for the time being, I think this is just basically a range trade, top of the range, bottom of the range, ping pong, RLZ ping pong, those kind of cat GIF images we talked about years and years ago, it seems. And ultimately, if we lose these lows, that's a 38.2 level there. And actually, in crypto, I think we're going to see very similar action. But if we lose those 38.2s, then that starts painting serious corrections to the downside down into here. So actually, that Litecoin chart and gold actually look very similar. Interesting to see the silver just lost its lunch here today. I'm not quite sure what the driver is here in the metals. As I sort of said before, just technically speaking, I really like to follow the yen and the gold market. I think they move in conjunction a lot. I beg your pardon, that's Canadian dollar. Yen's here, gold's up here. Sorry, guys, it's a little bit disjointed. But, one thing that's encouraging to me for the gold bugs is the fact that I've often said this, I do not believe that the gold market and the energy market can move in conjunction. Usually they have to move in opposites. So if oil here is actually topping out and we saw those intermediates are kind of backing off, then, maybe this top here in crude is for real. You can see the bearish divergence that looks like it's basically going to confirm here if we finish the day pretty weak here. Willie, of course, very stupidly overbought. So, like swing traders, hopefully everybody sees the M up here. And 50% rules. I don't know whether we want to use this ultimate low all the way down here. I think I might be inclined for the swing traders just to simply use that low. And let's see if the, yeah, interesting. So the 25 level for the swing traders is basically going to set up off of whatever today's sort of dump low is. So if this has legs and it M's out, then you can see how the applying the bot rules to this range trade actually might set something up interesting to short on crude here going forward. So we'll keep an eye on that. And as we sort of pointed out, some of these energy stocks looks like they're basically run out of steam here. So usually the oil basically follows last, and the stocks come off first, and then the commodity follows. So we'll see how that goes. And then also too, Canadian dollar is very energy dependent. So the fact that the Canadian dollar is pretty weak here too, that sort of reiterates that kind of thinking. Wow, holy mouthful, Batman. I hope you guys got some value out of this offering here this morning. Let's see. Anything else I wanted to comment on here? Crypto stocks. It's interesting, this DPW, right? Thomas had made reference to this down here in the 20 cent area. So congratulations to Thomas. I think that was an excellent call. Stock ramped all the way up to 30 cents, so not a huge move here. But, those people that are interested in playing DPW, I think basically you were given your sort of trading range level there. And hopefully you're sitting actually in a nice little long position right now. And I mean, this thing's just all open air up top. So if we have any kind of counter trend rally in crypto and Bitcoin and stuff, this thing might actually catch a bit of a bid, and there could be some really nice money to be made there. So hats off to you, Thomas. If anything, maybe that's crypto's present to you on your birthday. Nice call there. That was a very nice call he made there the other day. Yeah, the rest of them sort of wishy-washy. I mean, it's a little bit late to be thinking about the Riot or the Hive. This HUT really don't like this big old gap here, so I'd probably want to let that settle down. I suppose we could maybe take a look at the rebonds again now. It's had its big sort of restructuring event, blow off top. They rallied it up, came back down, filled in the gap. So, relatively speaking, there might be a trade to set up off of these lows. Very much like how this DPW set up off of these lows. If you do buy, risk against these lows. And you can see 200 period moving average is way up here. Even a 50% retracement of just this recent move probably is going to equate to a nice little trade there. So keep your eye open there. Uranium, along with energy, caught a bit of a bid recently, so it's nice to see Caminco working its way up. This is Kevin's energy stock. If anything, another great conversation about how, the bigger energy stocks have already had their rallies. That Silica that we looked at, the Halliburton we looked at. It was the intermediates turns over this past week. And so, Bloom here is just sort of treading water now after the nice dead cat bounce. But my uranium ideas, my little cement stock in the uranium business, it might M out here. Wouldn't surprise me on a free position, so I'm not really worried about it at all. Little junior TRI SOFs, just sort of treading water. Not a heck of a lot going on. If anything, really good example of why we really shouldn't be buying stocks with a bazillion gazillion shares out. I bought this thing at 6 cents thinking it was dirt cheap. It's basically fallen in half, and it's just doing nothing here. So really, really good example of, yeah, you might think that the idea is going to work, but structurally it's not really sound, and as a result, you just sit there and do nothing forever. So that was a bit of a brain fart on Brian's part. The rest of these are all looking relatively respectable. Nothing really to get too excited about. Right. Yeah, just a whole bunch of back and forth. Nothing really to get too excited about. Little disappointed in our drone stock. I will admit that. Those people that were kind of like, I'll trade this range. If we break the bottom of the range, I'll walk away. That's probably in hindsight not such a terrible idea. I still have this position kind of because I just really like that drone industry. And I like this story. The problem here is that the chart is just not cooperating. And ironically enough, guys who actually did trade here, they did get doubles off on this spike higher. But, this is, if anything, great example that OTC stock is very similar to crypto, right? And these big pops we see in crypto, you better have your open orders to sell halves on doubles working. If you don't, this is often what ends up happening. I didn't put much money into this. Little less than 1% of my account, my trading account. So as a result, like I said, I really like this story, but this might turn into a Calixia where I'm just sitting underwater for a while. That wouldn't surprise me at all. So anybody who's sort of like, you know what, Brian, I don't want to take the risk of holding on to a bag. My actual general feeling is maybe just hop off and, let the dust settle. But FYI, for my retirement account, I won't be doing anything here. All right. Anything else to get excited about here? Looks like it's all just a lot of back and forth. It was interesting to see one of the stocks that we were watching for the little club that Zach and I put together just went absolutely insane here. Look at this crazy ass thing. Son of a gun. So, wouldn't you like to wake up to that kind of action? Look at that, eh? Son of a gun. So, but unfortunately, we weren't able to pull the trigger here. But wow, what a move. But if anything, the one thing I do like about this is we were at least thinking in the right direction. That's what you want to see your David's T do, right? Bearded Nerf herder. So there you go. Okay, maybe we should head on over to crypto now. I was pointing out yesterday on crypto that put out lots of tweets about this battle. It's interesting how the Fed minutes did come out, and I was sort of anticipating that following that event, we would get some sort of resolution. And unfortunately, it just looks to me like they popped the market higher through that sort of dead zone. Like Thomas likes to trade that New York close zone. But I got to tell you, that's extremely dangerous stuff. Remember, Thomas is like a very, very advanced trader. We used to actually have a rule that you're not actually allowed to trade following the New York close until the Asian session actually officially opens. And of course, we say that, never trust the first hour of trading, yada, yada, yada. And any kill zone. So unfortunately, I think there was a big trap laid yesterday. Here, this is that Litecoin chart. Notice basically there is the New York session close. So Fed minutes were released. Crypto all went sort of yah, rah, rah to the upside. And then literally, beep, New York close, inside bar, and we did nothing but go down following that event. So I got a funny feeling a nasty trap was laid there in crypto yesterday, which kind of sucks, but this is trading. Let's see if we have that Bitcoin chart. Yeah. And so I was sort of tweeting out yesterday that we did have, where's the best one to show you? We did have things like lower time frame bots, and we talked about this massive battle between Mountain Man and Brian's bot. And I was feeling pretty optimistic that the bot was just working away and we were feeling good. And then we had Fed minutes come out. We got a nice pop right here. Hit move stop to scratch level. And, I was like, woo, yay, the bot, and when we hit this move stop to scratch level, anybody who did take this trade in a weird sort of way, they go, phew, all right, thank heavens that's over. At least the worst case scenario, I just walk away basically at scratch if this thing falls apart. And here's a great example of this thing just falling apart. Just what a mess. And through that sort of Asian dead zone following the New York close and waiting for Asia to open up, this market basically politely told you, you know what, you're probably best just to hop off. And I think, I put lots of tweets out to that effect that, well, Brian's officially back on the sidelines, got to cool my jets. And sure enough, we're just sort of stair-stepping our way lower here. This looks very dangerous here, guys. If we do things like, can we see maybe signs of divergence to maybe sort of suggest that the bull is in charge? Not really any signs of bullish divergence. And what really worries me and sort of concerns me now is if we actually look, where do I have it? I think I have it over here. Yeah. Colleen, what do we say about OBV divs? Are OBV divergences important? Are they significant? Which is more important, a price momentum divergence or a volume momentum divergence? Yeah. So, the bottom line here is this was a very bad sign to see. Not good at all. And on that sort of confirmed divergence, Colleen, can you see the bears ramping up here? Can you see them waking up and taking over this market, these red bars here? And at the same time, where the hell did the bulls go? The bulls sort of just disappeared. And I do remember last week, or maybe it was just even the beginning of this week, I had sort of raised concerns that I didn't like how we were potentially forming bearish divergences now off of things like 4-hour charts. So this is a Bitcoin off of OKCoin forwards. Can you see? Look at that divergence. Oh my goodness. What letter of the alphabet does that OBV look like? Ay, 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 ay. So this, unfortunately, my friends, is not a good sign. What are we supposed to think if we ever see the market smiling at us? Uh-oh. So this is why I was sort of going into the chat room this morning, and I was just like, okay, everybody just cool your jets. There's no doubt about it. We've been talking about this for a while, so I don't think anybody should be like, oh my God, this is a total surprise. We've been talking lots about this 50-day exponential moving average, and of course how Bitcoin, like off the trending signal, has not turned higher yet. How was this market going to act in comparison to the last time we went through one of these events? And unfortunately, like I said, yes, they took the market higher following those Fed minutes, but it wasn't on very good volume. It was at a horrible time of day for us to consider a trade. And sure enough, we crapped out. And more importantly, now off the lower time frames, we've actually put in some serious structural damage in the form of things like, where the hell did it go? These divergences, right? And unfortunately now also too, you should be able to see this just the nastiest, ugliest looking divergence. This is a double divergence, right? So in the price momentum oscillators, not only do we have this little div right there, boom, 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 right? That's sort of there to there, there to there. But we also have this bigger divergence, right? Which looks like it's confirmed as well. There to there, and that's off of those highs, there to there. So we got double D's working here now. Oh, Jesus. So yet further sort of testament, cool your jets. There's no hurry here whatsoever. This has got lots of cleaning up to do. And if anything, Thomas is going to be like trading like a banshee through all this. He's going to have lots of fun. He's probably going to be buying against these lows, looking for a test of the top end of the range. Then we get back up. If we am out on a test of the top end of the range, he's going to be looking for shorts. And if anything, this is like Thomas paradise.
Well, I was just going to add
like,
2 cents here. Sorry.
You got a volunteer. All right. Hello, Grim. How are you today?
Good. Sorry, I didn't mean to interrupt you too harshly. I was just going to point out that the 38.2 our Ray barbecue level is down at like 4,600 ish. So I wouldn't be surprised if we came down and tested that.
All right. Let's see what Grim's got on his chart.
This is BitMEX here. So
perpetual swaps. Yeah. I wouldn't be surprised, and what I'm kind of thinking just in the short term is you see these little tails right in here, and you see the 13 EMA. My hunch is that 26.4. Can't remember what that fib is. I don't really follow it because it doesn't set up trades for me. But I wouldn't be surprised if we find a bit of short-term support in this neighborhood here also. But yeah, I mean, I concur with you. 38.2 is all the way down here. My hunch is this sort of does like a back and forth bob and weave to work its way down into these levels. And the worst part about this, guys, is that really the area where we should really be hunting location is actually down in this sort of 61.8 to 78.6. Is this enough to justify an actual short position off of something like a daily chart? I don't think so. It still hasn't developed enough. If anything, what we like to talk about is first location, then divergence, then structure, then go. So interestingly enough, on Grim's chart, you can see that we did have this traffic area here previously, and that sort of lines up with that 50 EMA off of my chart. So I wouldn't be surprised if there are guys that actually were hunting sort of location against these levels here. It's a bit advanced, 50 EMA sort of trade. As Alex B was suggesting there a moment ago, I could actually understand, the more advanced trader seeing this level in here, seeing the divergences developing, seeing things like Willie getting stupid here, and then seeing this inside bar off of the hourly charts. I could see the more advanced trader getting short off of that failure there. But that's high octane trading. And remember, Alex B has gone through the level 1. He's gone through the level 2. He was a TA for the level 1 program. He's built lots of scripts. I think he definitely is a professional. I think he's learned how to be a professional in the market. So it doesn't surprise me that people like Alex B were actually hitting this. And like I said, if we talk to Thomas the Bear, if we actually pop on over to Ethereum, situation looks a hell of a lot worse. And interestingly enough, this actually looks like a Thomas trade in glorious Technicolor. So, whether you actually took a trade on Bitcoin or not, I think this was the end of the move. How this was going to resolve. If you were playing trend continuations, you had a polite notice to get the fuck out of there. But I do understand that was pretty much the end of that move, not the beginning. Now, if we pop on over to things like Litecoin and Ethereum, actually these tops are actually a hell of a lot more defined. So, first we look at Ethereum, and I even put a chart out to this. How do you tell when there's a top of the market? Usually in crypto, we can tell there's a top of the market when these rap stars come out and start making rap songs about how much money they've made in the crypto market and how they're all driving their Lambos and how they're all like, chicks pouring out of their pockets and, all that kind of stuff. Well, talk about the Amanda. Well, if Amanda came out and did a rap song, then I'd be like, oh, fuck, that's it. But maybe there's something that's similar to that. Mr. Vitalik came out and was doing rap songs. Oh, Jesus. So, what a classic sort of tell of the top of the market for you when computer geeks are actually becoming rock stars. Oh, goodness. There's something wrong with that picture. So if you want to laugh, right, listen to this. But if anything, my sort of response to that was market top event. Ironically enough, the market was actually smiling at us. And Colleen, what are we supposed to think if we ever see the market smiling at us? Uh-oh. Yeah, that's not so good. So the irony of it all is that I could see this has got Thomas written all over it. Whether you took the actual M itself, which would mean that you'd have to risk all the way against the top. That's a bit of a risk. Nonetheless, you can see basically the trade's working. I actually do really like, and Thomas isn't here, but next time he's on the show, I'll be more than happy to quiz him about it. I love the idea, and I got a funny feeling this has got Thomas written all over it. But I absolutely love the idea of getting short off of that move up there and simply risking to new highs. That would take, balls of steel. And that was that sort of event, right, at the end of the New York session. And that sort of little pump, which to me, I think was basically a trap. But let's see, where the hell do I have that? You're around here somewhere. I thought I had those hourly charts up here. Too many charts. My head's going to explode. Oh, God, you hear Brian say that almost every day. I think it's over here. Yeah, here we are. So, I mean, this is the trader's trade, right? There is that Fed minutes actually came out right here. Isn't that interesting? There is sort of that Fed minute counter trend rally. And anybody, and interesting, that counter trend rally, you could see the divergence in OBV was already starting to form. You could see there was a little bit of a divergence there in MACD, not the biggest of ones. You can really see the divergence in our price momentum oscillators. And, if not easy to do by any means. I'm not going to say this is easy at all. But you've heard me talk about sort of candle body highs. If they can line up with reload zones. Can you see that trade location? Damn. Just absolutely sick. I mean, hell, you could say, well, what the hell, Brian? I'm going to hit that one up there. And wow. I mean, what a trade. This is probably Alex B. That's probably your trade, eh? I mean, reload zones to candle body highs, above value, just basically risking against a move to new highs with the internals just looking like a train wreck. And boom, there's your trade. Now, the good part about this, like I sort of said a moment ago, is it kind of feels like maybe this short is played itself out to a certain degree. If we just use this range, 38.2s now, Ray barbecue levels. Gee whiz, there we are. You see how that just lines up so nicely? So my hunch is they dump the market into these levels. I agree with you, Graham, off the higher time frame, 38.2s are probably a hell of a lot lower if we start looking at a higher time frames. But I think over the short term, we're running into support. Now we've actually got lows that we can work with. We got this big old tail in here. It might be interesting actually if we drill down to like an hourly chart to see things like gaps and stuff. And actually, you know what I'm kind of seeing here? I know it's going to be kind of sloppy, but I'm actually sort of seeing like head and shoulders-y type action here. I wouldn't be surprised if we do something along the lines of this, right? So I'm kind of thinking that we're coming into a bit of a pivot here. It really wouldn't surprise me. But wow, what a trade on that Fed minutes trap yesterday. Just phenomenal. And then, sort of finish off our conversation here, Litecoin. I had actually put out, and I think I was talking to you guys on TRI yesterday about this. Again, there is that, holy crap, what a trap. Fed minutes released, rah bull. Volume, while it was encouraging, it wasn't staggering. You can see how we had this little mini trend line that the market rallied up against, and then inside bar failure, and boom, down we go. I had sort of put a tweet out, what does sort of range traders look like? There was that candle body high level there. And I had sort of mused, well, will we get sort of a fight against these candle body lows? And the market came down into that level and said, nope. And one reason I think why was because we had this red AB equals CD, huge level, right, which painted that as a target. And then we had this teal AB equals CD, which painted that as a target. So that sort of created like a harmonic target window for me. And I think this red AB equals CD was the money. And that's why I think that the market has sort of come down into these levels and sort of said, okay, enough is enough for now. At this point, because we've done some major structural damage on this Litecoin, I actually have to start thinking about even bigger smiles just confirmed on this move here. Now, kind of like Ethereum and to a certain degree Bitcoin as well. Like when I had a daily chart, can you see how we're coming into the 13 EMA on the daily chart there? Can you see that? Anyone? I agree with Grim, right? 38.2s are down at the 200 SMA and 30 SMA. But I think in the short term, 13 EMA and these tails here are going to actually provide support. And gee whiz, who can tell me, is there anything significant about $5,000 as sort of a level? Is anybody? Hey, very good, Adam. And hopefully, Adam, you're seeing this more and more and more. Because I tell you guys, I mean, this is pretty powerful stuff. So in a weird sort of way, and I think that's sort of like, where is it? Was it off of this one? No, that's Litecoin, eh? I think it's off of this one, right? Have we seen this level before at all in our recent past? Oh, isn't that weird? Maybe it was the 4 hour that I did. No? Thought I had written on here, big, fat, round number, right off of $5,000. So my hunch is, for whatever it's worth, actually, you know what? I think I did it like off an OKCoin chart. Question is, where the hell is it? Maybe it's over here. Yeah, there it is. One big ass BFRN. So can you guys see how BFRN acted as resistance on the first move up? Resistance, back down, accepted above, then became support, then turned back into resistance, then support, and now we're back to support. You see that? Isn't that cool how that works? It's ridiculous, eh? And I'd sort of talked about this a few minutes ago. I'm kind of thinking head and shoulders-y kind of action here. So I wouldn't be surprised if, You know, it looks ultimately down the road, the top looks something like this. That really wouldn't surprise me at all. You know, is this the bottom? I don't know. Maybe there's another fuck you to go. Usually what happens, you know, this is why I really like, you know, us talking divergence to sort of tell us, you know, I think I did this on that sort of that broiler chicken show where I sort of tried to tell the public, you know, what is sort of the signs that we've turned. First off, you know, 3 reasons for a trade. First off, we want location. So we are at or below a reload zone. That's good. Second thing is we want to see signs of divergence. So if we're actually thinking of counter trend rally, what I'd actually like to see here is the market actually come back down. We forge new lows, wipe out these guys. You've heard me talk about how the market loves to set up off 78.6. I would love to see something like that. On this dump to new lows, the MACD does not go to new lows, and that creates our divergence scenario. You know, this counter trend rally here actually fires the divergence, and then, you know, structurally we get our signal way over here. That would be sort of the ideal scenario. Location, divergence, structure, go. Does that make sense? What do you think, Dennis? Is that sort of what you learned in the, I think, Dennis, you were in the 11-1 program, right? I'm going to pick on somebody else other than, hey, Khalid. I decided that I'd give you a break there, but okay, if you're still paying attention, that's cool. I think Dennis has tuned me on. I've been talking for an hour and a half here, eh? I should probably wind this up. So, you know, Willie's nice and stupid off the lower time frame, so that's good. We got the break. The only problem here is that the higher time frames are now starting to roll over. So do we really want to be hunting longs aggressively? I don't know. If anything, what I'm kind of thinking of, you know, and by all means, it's entirely a function of your trading plan. Like I said, monsters like Thomas and like Alex B, and we got a whole bunch of them, probably Grim too, running around the site. If they've built trading plans to trade off of hourly charts, okay, that's fine. But, you know, for new people, level oneers, maybe like paper trade this stuff for like 6 months before you really are ready to actually committing to an hourly trading plan. But long and short of it here is I actually really like the idea of, you know, a counter trend rally that takes us up. And if this is actually, quote unquote, the top, then because of all the damage that's been done off the higher time frames, we actually are hunting short windows in this reload zone here. Above value high, Mountain Man, and I've just eyeballed this. I don't know where the ultimate low is going to come in. But you can see, you know, even if this is the low, or if it is a bit lower, you can see that that reload zone doesn't move a heck of a lot. So I'm kind of thinking that, you know, you could be hunting this long. You know, the daily charts are still pointing higher, but as Grim sort of pointed out, not the best trade location for us to be hunting longs just at present. I kind of like the idea of letting this counter trend rally back up into candle body highs, back into reload zones above value, looking for shorts. So that's sort of what I'm thinking at present right now. Now, the only other thing I would suggest to this is, you know, it's not a bad idea to sort of, and it's a little bit more advanced level 2 kind of thinking, is if we can just listen to the internals of the market. You know, this is where things like the OKCoin forwards matrix really helps us out. As long as this was continuing to W higher, and you can see higher highs and higher lows, yeah, the bull was rocking and rolling. Everything's just kicking butt. But something nasty just happened. Ouch. And honestly, I think it was the trading god said, "Mr. Vitalik, please get off the stage. You have no business being a rap star." This is the way the universe sort of says, enough is enough. They won't come right out. I know. I'm being a little bit mean. So, but Adam, do you appreciate this sort of the message that I'm trying to convey here? That if anything, that was a classic hallmark of the top of the market, right? So, let's listen to the internals of the markets. And we're getting some really nasty. This is another bulls. You better just cool your jets, right? Maybe we can bottom out here and the bid can start coming back into the market. But for the time being, we got to cool our jets. Just simple as that. Now, I'll finish off today with just the idea that I have been nibbling away on altcoins. But remember, most of my trades in altcoins are like total nanny nibbles. They are fractions, just not even 1%, like fractions of 1% buys, like 0.025 BTC. I'm doing lots and lots of that buying against lows, but I'm not betting the farm right now. And I still firmly believe that we are in Chop Vegas market. Where's Chop Vegas? Chop Vegas, you're around here somewhere. Paging Mr. Vegas, Mr. Chop Vegas, where are you? What did I do with Chop Vegas chart? Anyway, usually it's like right here. I don't know. There it is. Crazy. And I wouldn't be surprised. I'm going to say this, guys. Call me crazy, but every single year I've been working in crypto, Bitcoin is shit on my birthday. So maybe mark that down as sort of a reason for a trade. Hold on a second. I got a call coming in here. I have to take this. It's from my son's people. I'll be right back. Sorry about that, everybody. As the bureaucracy soap opera churns. Actually, my meetings were just canceled today by the bureaucrats. So that means we could go for another couple hours. Yeah, coming from the people that don't have to talk. Oh, yeah, we never told you when my birthday is. Well, Colleen, I'm not going to tell you the date, but you should be able to get a hint just about roughly when my birthday is. No, I mean, look at this chart. I said that Bitcoin loves to shit on my birthday, and here we are. There's actually, all right. Oh, isn't that interesting? Oh, okay. Wow, isn't that interesting? So we might even be a little bit ahead of schedule here. All right. Well, anyway, the point of the matter here is this was the 2015 bottom. And basically there is my birthday right in that window there. And I'm kind of thinking that we just had the 50 EMA rejection. If we're really lucky, we put in a nice tight bottom here and we can continue on here. I wouldn't, if I was putting odds, I would say the odds of that happening are relatively slim, especially in the face of All right. Jesus, I got too many damn screens. The forwards I was showing you there earlier. I don't know where the hell I went. Anyway, here, especially in the face of this, if this could mysteriously somehow just clean itself up very quickly, and we start Wing out here, then okay, maybe we can do trend continuation. Well, I don't know. Do you like going to those? Do they call male strip clubs? Do they call them peeler bars? I don't even know. What do you call like a strip club that that ladies go to? Is there like a name for that? Anyway, so whatever how that they call those. Colleen, do you like going to those? And what kind of men do you like seeing there? Do you like seeing the big construction workers with the plumbers' butts? Or do you like seeing those tight little bottoms? Yeah, research, Adam. I love it. No, this is all purely professional. This is research. That's great. Anyway, so Colleen, I'll leave you to answer that question as our resident female. What do you call that? Speaker. You'll be the voice for our. And where is Sheila these days? Jeez, I miss Sheila. And Leanne, if you're watching this later on, I'm missing you too. So anyway, so the point of the matter here is, in the face of this, it's awfully tough for me to believe that crypto is going to just instantly pivot and head right back up. So with that said, I'm still thinking very much chop Vegas. Do we have to come all the way right back down to the original bottom? That could happen. It really wouldn't shock me. 50% retracement of this entire move, which should be sort of like our default. Anytime you see any market move, you should instantly say, what's a 50% retracement, right? Just good old WD Gann. Yeah, she's a bit quiet. So, but she's in the level 2 program. She just wrote the level 2 exam. So 50% level setting 42.85. That's not a bad sort of starting point for us to think correction. That would basically be a classic Wyckovian check. If we could put in a nice little W through here, then, maybe we can continue on our way. My birthday is basically May 11th, so right in that window there. And what a coincidence. You can see after the EMA rejection, about 6 bars of just down. So, could we see 6 bars of just malaise here over the next month or two? It wouldn't shock me, people. I wouldn't put it past Bitcoin whatsoever. And if anything, you notice how they did a nice little FU move here against this W here, just to make sure that, if this is the bull and this is the bottom, they're going to just make darn sure that anybody who did take this W, hey, that Beamish guy says the W's are the shit, man. We got to buy that. Okay, well, let's go fuck them, and make sure they're washed out, and then put in a quick little W and take off. And I used to work with a professional trader, Linda Bradford Rajski. I don't know whether you remember ever hearing her name before on the internet. Very popular trader. She's written lots of books. She also devised the Holy Grail trading system. And I used to ask her this all the time, right? If you've got a level and you're really interested in a trade idea, how many stabs at that level do you take before you say, fuck it, I was wrong, walk away? And she was always like, I always try twice. And if anything, this is an absolutely perfect testament to this, where, if you were like, well, I've got, a dead cat bounce off of a bottom, got reload zones, Mountain Man, I've got W's coming in. I've got fractals, so I'm feeling pretty good about taking a long. And, the market does jump up here. But then it comes and stops us out. But notice that the stop out, right, the market W'd shortly right after that. So the first attempt, and if you did take this W and you didn't take some profits here, oh, tisk tisk. But you notice, boom, the first attempt at the bottom failed, but the second one was basically it. So could we have, this is the first bottom. Could we have a nice little swim against these lows, maybe just wash out some weak hands, and then we go and put in a tight bottom? This would be classic hallmark chop Vegas. This is why I call this chop Vegas. And I'm seeing this a lot on altcoins right now. And, through chop Vegas markets, things could get a bit tough. I know all of you guys are like, this is it, man. New highs. We're all going to be rich. But I got to say to you, I just don't think we're quite ready yet to go back into that face rib bull market. It feels too early. And I'm a little worried that this Litecoin rally was sort of the hallmark of maybe the market's gone too far, too fast. So where can I show you that? I had the Litecoin chart up here. If anything, you could even argue that, I don't know where the hell I put it. It's in one of these charts. One of these charts is not like the other. Yeah, I think here it is. Yeah, I found it. No, let's use a different one. Not there, not there. I had another one on here that had just the daily charts on here. Problem is I can never find these charts quick enough when I'm talking to you guys. I feel like I'm getting warmer, There it is. Yay, I found it. Woohoo. So, somebody, I don't know whether they were in the lounge or whether this was on Twitter or something like that. They were just like, oh, it's straight up great little, look at that bullish signal. Talk about a cool ass trade level, right? Woohoo. But up here, is it healthy to expect more up here after we've gone through all of that? Holy free holies. And I'm getting a little concerned. Everybody should be able to see this market structure, right? Can you see the W? Down, up, down, breakout. And then, of course, look at this fucking kick-ass W right in here, right? But holy moly, that's double the price. Colleen's now asking herself the questions that I would ask her. So yeah, I've trained you well. Very good, Colleen. Now the question is, do you hear me asking you those questions in your sleep? That's where it gets a little crazy. So, expecting further upside here. Oh boy. And if anything, what's concerning is, do you see how this guy's right here? This is the classic too far, too fast. Is that a healthy? Is that a normal way price moves? Not really. And what's worse is that Mr. Gann, this is always a question of, scaling. Since we don't really have a time limit here, I suppose I can show you. In our level 2 program, we go through Gann extensively, and really, ironically enough, the Gann people actually, they like to use the point and figure sort of cheat sheet for box sizes. So if we go down to our box size and $20 to $100, actually they're saying just use $1 reference. So that's kind of interesting. If we do set up our chart using a $1 reference for time and price, but I might have to refresh this. Hold on a second. Are you guys enjoying this today? Is anybody getting any value out of what I'm saying here? Am I wasting your time? Because I always talk about just, like this is the kind of stuff that, I wish like 20, 30 years ago when I was starting, somebody would just slowly walk through all this stuff with me. Of course, nobody ever did, but I like to fancy myself as a little bit different, cut from a different jib. But there are some people that are like, fuck, that guy talks too much. I don't know. Sometimes I think it helps. Sometimes I think it it doesn't. But anyway, I'm just having fun. So, okay, so we've set up the Litecoin chart. It's under $1, so we're going to use the 1-to-1 scale ratio. And then we're going to go on to our Gann square. And the problem here, of course, is that, which Gann square do you use? TradingView seems to change the rules quite a bit. But if we just use this simple fixed scale, then we get a study that looks something like that. Interestingly enough, a healthy natural normal trend line actually should follow that 45-degree angle. I don't know whether I really like this scale or not, though. It looks like it's too small. Obviously up here in the hundreds. I don't know whether 1-to-1 is totally relevant, but there we go, something like that. Actually, here, that's the reaction low there, right? We're kind of floating out in no man's land here off of the down angle. I suppose we could probably rally up into that angle there. But I guess what I just wanted to sort of point out, and maybe this isn't totally relevant for this study, but isn't that interesting? Look how basically we smacked right off a horizontal support and resistance level there. So not a big surprise Gann-wise why we stalled there. But this kind of move here, just straight up, that's not normal, healthy. It looks to me like we're following along these, especially this one here. It almost looks to me like this is the predominant trend line. So that's 2 scale factors down. If we change the scale to, say, $2, let's see what that does. That should shift everything by 1. Whoops, that's going the other direction. Oh, interesting. All right. So the point that I would just make is that this isn't really sustainable over time. It is fascinating. Look at this. But this is really interesting study. So this horizontal support and resistance level, you can see how the market had to work at that. We have a rule that says that you really shouldn't take a trade through a speed bump, but you can take the trade following the speed bump. So in essence, you got your trade signal right here. And look how we just went zipping straight up to the next horizontal support and resistance level. Came back, played with the angle, then back up, tested that high, came back to the angle again, and then just lost it. So interestingly enough, angle-wise, we have horizontal support and resistance here at about $60, and we've got this angle sitting here at about 65. And probably my hunch is, if we did one of Grimm's studies, my hunch is that's probably an important fib level as well. Let's see what we got here. Boom. All right, so that will, interesting how 50% is basically that horizontal support and resistance level. There is that next up angle that we should be hunting for, and there's 38.2. So just even in the short term, I'm thinking sort of back against these levels. Now, as Alex B just suggested, if we actually maybe change this scale to like 25 cents, maybe the 45-degree angle lines up with that now. Nope. Well, okay, maybe. So you could argue on 25 cents, there's sort of the predominant trend line. We got up into these levels. Interesting how off of 25 scale, you can see the speed bumps sort of stop the market there. So I don't know. That's a tough one. What I will say, though, just simply put, is I do like off of that 1-to-1, those horizontal support and resistance levels. I think that's pretty significant. And this angle right here looks to me to be sort of the pivot Gann-wise. And so we really should be thinking down in this area going forward. So, I guess what I really wanted you guys to take away from this is this kind of price action, that's not normal. That's not sustainable. That's not natural, healthy growth. What we really want to see is sort of just that long, slow back and forth. So that's a little bit of an interesting look at Litecoin from a GAN perspective. So, general message that I would give the community is it is critical right now that you understand what type of investor you are. Don't try and be somebody else. Don't try and be Thomas if you haven't put a good year or two in sort of understanding and learning how you behave, what setups appeal to you, what kind of risk taker you are. Really get in touch with what type of risk taker you are. I don't have a problem slowly accumulating altcoins here. But remember, I am not betting the farm on any of these purchases. In fact, I think I got filled on about 3 or 4 different little stink bids that I had working here today. But these are all like infinitesimally small sized trades. They are not, they are classic nanny nibble, just buy and hold kind of ideas. They are not trading setups at all. The setup is go in and take little nibbles against the bottom end of ranges, reload zones, market structure, et cetera, et cetera. No guarantees that these lows are going to hold, but I just simply want to force myself to go in and buy against the bottom end of ranges. And sometimes these bids go, belly up. All right. I had a couple, quite a few of them work really nicely, but I've had a couple that have just absolutely just been atrocious. There was one that I bought recently. What the hell was it? It's just slipped my mind. Yeah, this cloak. I mean, trading wise, if you were trading this thing and it broke the bottom of the range, get the fuck out. It's just as simple as that. But, nanny nibbles, I don't have a problem with this just sitting on this, because really what I'm thinking about is what does the big picture look like? And, if this thing takes 6 months to sort of try and find its footing down here, I'm perfectly fine with that. But you have to understand what type of risk taker you are and the model that you're running. It is critical, people. If you are putting a bit more money to work here and you're trading setups and the bottom of the setup fails, just get the fuck out. It's just as simple as that. And Christopher says, new lows make me sad. I will just simply say that is an excellent journal entry. And by basically looking at that and knowing that you don't like it when markets move to new lows, then you're going to build in your trading plan that if the market makes new lows, I am getting out. Simple as that. And then really it's just a question of, can you follow your plan? So please, everybody, please understand it is incredibly important that you put your plan in place and you follow your plan. Don't try and ride the coattails of a guy like Thomas, because my hunch is most of you just aren't there. But if you want to be there, that's fine. You can build a plan that sort of replicates what he's doing and then paper trade the shit out of it. And if you can get to the point where you're trading setups and you can get stopped out and you have no problem with that, then perfectly fine. If you are brand new to this, and my hunch is absolutely best place to start is sort of that nanny nibbles kind of thinking. But you have to understand, if you're nanny nibbling, you might have situations like this. Remember, I put like just staggering small amounts of money into these things. So please understand that, everybody. Now, I will say for the site and for the record that I would like to be trading more. I've been put under immense amount of pressure to deliver course content this term, and I still have one more term of the level 3 course content that takes up a ton of my time. And so as a result, I have a very hard time committing to a lower time frame trading plan. And also too, If you're trading lower time frames, you have to understand in crypto, you might be woken up at 2 or 3 in the morning. So if I can get back to the life of not having to work on course content and being able to trade my plan and living relatively carefree, not worrying about my son. My son right now is a massive psychological anxiety focal point for me right now. I fully acknowledge that I am not in the position to trade a smaller, lower time frame trading plan right now. I'm just not there. But that doesn't mean you can't be. And this is why I love having guys like Thomas part of the community to demonstrate that, yeah, if you can live that life and you are there and you can commit to that plan, then rock and roll. So just be aware, yes, you're going to look on the web page and you're going to see a bunch of purchases that Brian did. As I said before, and I've well telegraphed all of these. In fact, on a daily basis, I put out, notices on the site that, hey, I'm working bids. I got a nice little list from Twitter there the other day of some half decent ideas that people working. I show you these guys. I'll take the trades, but this is total nanny nibbles, total, sell half on a double. Other than that, don't be too concerned about the position. So just please be aware of that, everybody. And, down the road, I fully intend to get back to trading. In fact, what I'd really like to do once I get all this educational material done and I can sort of put that sort of project to bed is I'd actually like to go back to Top Step and get refunded. And before I do these daily briefs, spend an hour or two playing over at Top Step and just taking opening range trade setups and stuff like that for them. And sort of show you guys how sort of a day trader trades. But I'll be completely honest and upfront with you guys, that's probably at least not until at least a good 6 months down the road. I mean, that's just, it is the situation. I've made a bunch of commitments to produce material for the site, and it's taking up a lot of my free time. And then the other free time that I have, like I said, I'm getting phone calls in the middle of these videos from the bureaucrats. I mean, wow, these guys have really, they're really working me hard right now. So Top Step used to be my old prop trading firm, Colleen. So anyway, I might as well, I don't want to bullshit you guys, right? I might as well tell you exactly, that straight goods. So that is my reality right now. So, that's just the life that I'm living right now. So. Okay, that is officially 2 hours. Holy crap. It's so funny when I do these videos on my own. I sit there at the beginning of it and I go, and I have no idea what the hell I'm going to talk about today. 2 hours later. Okay, well, there you go. So I think I'll leave it at that. James, if you're going to do a video session tutorial for the level 1ers, I think that would be awesome. That's not a bad idea. Okay, well, everybody turn your microphone on and just do a test real quick. Adam, you're going to lead this on.
Test. Okay, everybody else try it.
Test.
Okay, good. So
we're going to sing happy birthday, Thomas. So I want to make sure you guys are all on board for this.
Happy birthday song for Thomas. Sounds good to me. In 3, 2, 1.
Happy birthday to you. Thank you.
Oh,
Happy birthday
to you. Happy birthday, dear Thomas. Happy birthday to you.
Way to go, everybody. Have a great birthday, Thomas, if we don't talk to you. All the best. On that note, hugs and kisses. And the only thing left for good old Brian to say at this point is bye for now.